Let's review ADM's 2024 financial results. Last year, we projected a $50 target price based on analyst expectations. Now, let's compare these forecasts with the actual results and evaluate the potential impact on the stock price. Analysts projected revenue of $86.3 billion, but actual revenue came in approximately 1% lower. More concerning is EBITDA, which was expected to reach $4.6 billion, but instead came in at $3.2, 30% lower than anticipated. This significant shortfall could negatively impact our stock price projections, as EBITDA multiple is one of our price models. Cash flow from operations came in higher than expected in both of our models. Revenue-based model beat by 7%, while the net income-based model beat by 84%. Capex was 10% higher than projected, and free cash flow was 31% lower than analysts had predicted. However, our own calculations show a 300% beat, and a free cash flow based on revenue model was 4.5% better than expected. And lastly, net income came in 5.5% lower. But what do these mixed results mean for ADM's stock price? Let's explore their impact on valuation to find out. From 2011 to 2024, revenue growth was minimal, increased by just 0.5%. Even from its 2013 peak to 2022 peak, the increase was only 1.4%. Gross margins have been, for the most part, slowly expanding, which is a positive sign. However, net profit margin have fluctuated significantly, averaging around 2.5%, with 2024 numbers declining to 2.1%, the lowest number from 2016. EBITDA margins average around 4.3%, with 2024 numbers at 11 years low. In 2024, Capex reached an all-time high, accounting for 1.8% of revenue. While cash flow from operations remained positive, it declined to $2.8 billion. Free cash flow, calculated by subtracting Capex from cash flow from operations, has been positive for the past 4 years, but remains historically volatile. This volatility stems from negative cash flows from operations between 2016 and 2020, primarily due to deferred consideration in securitized receivables. In 2024, we can see a significant 9% reduction in outstanding shares, with an average yearly reduction coming in at 2.2%. Dividend growth has been strong, more than doubling from 2011. But if we take the shares reduction into account, then the dividends more than tripled. On average, the dividend increases by 9.6% each year. The 50% payout ratio was higher than a long-term average, but still within a healthy range. Before moving on to the stock valuation, let's look at core business profitability. By adding together net income, depreciation, amortization, and taxes, we can then subtract capex and dividends, and we can see that the core business was profitable for the past 7 years. Although in 2024 I couldn't find numbers for deferred tax yet, but I can see it being negative. Let's now move on to future projections, from which we will be able to get our stock price. But before jumping in, know that these are assumptions, and this is not financial advice. Do your own research before buying the stock. Let's start with revenue. For a bear case, we used a 0% growth. For average, we use a 0.75%, and for the bull case, we use 1.5%, which is slightly higher than peak-to-peak average. For net income, 1.5, 2.25, and 3% were used. And for EBITDA, based on historical averages, 3.5, 4.25, and 5% were used. For cash flow from operations, we based our estimates on its relationship to EBITDA. However, since it had been negative for some time, I applied a 75% reduction to EBITDA numbers, leading to these figures. Capex is set at 1.75% across the board. With these numbers, we can now estimate free cash flow, which ranges from $750 million on a low side to $1.7 billion on a high side. The terminal value is estimated to be between $14 billion and $33.3 billion. If we apply now a 8% discount rate, the adjusted present value falls between $12 billion and $28.6 billion. If we now sum all up, we get a present value in our perpetual growth rate model, but here we can add in cash and subtract debt. To get the final stock price, we need to divide this number by shares outstanding. This gives us a stock price estimates ranging from a low side of $9.62 to $49.05 on a high side. Now, let's move on to EBITDA model, where we take 2027 EBITDA numbers and multiply them with the company and industry averages. This gives us a terminal value between 31.3 billion and 46.8 billion using the company average, and between 29.5 billion and 44.2 billion based on the industry multiple. Now, to estimate the stock price, we take these values, discount them back to today, add in debt and cash, and then divide by the number of shares outstanding. This gives us a price range of roughly $35 to $62 for the company average and $32 to $58 for the industry average. To get our final price estimate, we can average EBITDA and perpetual growth rate model. This gives us a company average range of $22.60 to $55.76 and an industry average range of $21.07 to $53.47. Now, looking at the analysts' estimates based on free cash flow and EBITDA, the stock price should be around $75. However, when we average all our values, we arrive at a stock price of approximately $38, so quite a big difference. But here, there's another valuation approach. We can take the average cash flow from ADM's core business, which we looked at previously, and multiply it by 20. Then we can add in cash and debt again, and this gives us a stock price of $39.11. So another valuation model, and we get a close price to our previous average. So based on all of this, what should you pay for ADM? Based on the analysis, I would say that a reasonable price would be around $40. In the short term, management expects further weakness in early 2025, with a potential rebound in the second half of the year. This means we could see more volatility in ADM stock during Q1 and Q2 of 2025, with maybe a more favorable entry point in the near future. Regarding the business itself, the only negative at the moment is that ADM's debt is greater than 3 times EBITDA, but it shines in the share repurchases, where it's outpacing S&P 500 average of 1.9%. If you are into exploring other opportunities, I recommend watching this video next. Thank you for watching, and stay tuned for further updates and other stock overviews as well. See ya!